Good morning, everyone. Let's give a second here for everyone to be able to populate into the webinar. Okay. All right, let's go ahead and get started for this morning. Good morning. My name's Matt Urban. I'm a shareholder at Weltman, Weinberg & Reese here in the Pittsburgh office. I am focused mainly, my work mainly focuses on credit union work here in Pennsylvania and also throughout the country. Also do a lot of consumer collection work and other related matters. Before we get started, I'd like to take a few moments to go over a few housekeeping items. As a reminder, this is an interactive session, so please submit your questions throughout the question button in the control panel. I'll try to address them as we go forward. If I see something that pops up that I think is relevant at the time, I'll go ahead and answer it. If not, we'll swing around and get it at the end. So don't worry if you don't see that your question is answered. Obviously it's in a little bar on the side here, so sometimes as I'm going through the materials I might miss it, but certainly feel free to ask any questions. I'd like it to be as interactive as possible. The webinar is being recorded, and at the conclusion of today's session, a link to the recording and a copy of the slides will be sent to all attendees. Also, and most importantly, probably why most of us are here, you will be receiving a certificate of training for attending the webinar in its entirety. Please be aware the certificates will be given out to those who have logged in to watch today's full webinar, so please log in using your own credentials. If you're talking through another person's login or email, we are unable to provide you a certificate. Please give our team until Friday, December 15th to send out the certificates. Lastly, there will be a short survey on your screen at the conclusion of the event. Please take the survey and share your feedback. We greatly appreciate hearing your opinions on the subject. So with all that being said, let's go ahead and proceed this morning from, hopefully you can see behind me, it's a rainy, cloudy day here in Pittsburgh, but it's about to get much brighter with the exciting topic of how to uphold the Bank Secrecy Act, staying compliant. All right, so some of the opening materials here, as we've already discussed. I don't know if the webinar will go an entire hour. There's about 70-80 slides, a lot of material to cover. But again, a lot of us have been through these before. Obviously, it's important that that we refresh our knowledge on it. But at the end of the day, there should be nothing new and revolutionary going on. Obviously, we're here to make sure we get compliant and stay compliant. So today's agenda. We're going to start with some of the goals of the Bank Secrecy Act, minimum requirements for the financial industry, money laundering, consumer identification program, record keeping, and types of reports. A little bit about us here at Weltman. We're a full-size creditors' rights law firm across the country. We represent nearly every type of creditor, including some of the largest financial institutions in the U.S. Large or small, doesn't make a difference. We can handle bankruptcy, consumer and commercial collections, litigation, real estate default matters, otherwise known as foreclosure. And of course, what separates us from a lot of collection law firms, a lot of law firms in general in this space is, we have very strict and closely followed compliance and security standards, not only set by our clients, but also certainly, our own standards. I know a lot of times I have credit unions who sit there and they might ask, well, do you guys do this, or can you do this for us? I'm like, we're already doing it for you. At the end of the day, our idea is to, we need to have a good reputation to be able to do it right. So if you want to learn more about about us and the things we do and how we can help you, please visit us at weltman.com. Okay, so let's get into the show here, and let's talk about some of the overview of the Bank Secrecy Act. So the Bank Secrecy Act, as we all know it, is the BSA. It's also known as the Currency and Foreign Transactions Reporting Act, or the Anti-Money Laundering Law. Well, if we called it all that, that's all I would spend time doing during the entire presentation, so we'll just refer to it as the BSA. Like most of these financial regulations, the FDCPA, fair credit reporting, things of that nature, it was passed many moons ago. In this case, it was passed by Congress in 1970, and it requires U.S. financial institutions to assist government agencies to detect and prevent money laundering. All credit unions and financial institutions must comply with BSA regulations, goes without saying. What's the real goal here? Obviously, we want to safeguard the financial industry from threats posed by money laundering and illicit finance. The crooks are out there, and they're always trying to pull one over. It's just the way it works, and it gets more and more complex and complicated as the years goes on. But I mean, how can you stay ahead of the criminals? Well, unfortunately, I'm not sure you can, but the best thing to do is be prepared. And to be prepared, you need to make sure you have good systems in place, good procedures, policies, and programs to protect the overall industry, not only your financial institution, but also the overall industry from different threats that exist out there. And it's funny, obviously we talk about systems, procedures, and policies. If I was giving a presentation on the Fair Credit Reporting Act, if I was giving the presentation on the TCPA, the Telephone Consumer Protection Act, or whatever, any one of these things, or anything, fair lending, at the end of the day, what do we always need to have? And all these presentations, you got to have good systems and procedures in place. And obviously, coming to a webinar like this, it helps you to stay compliant. You get the training to make sure that you're staying up to and hopefully ahead of the threats that exist. Obviously, goals of the Bank Secrecy Act, you want to continue to train the industry to recognize and report fraud, and ensure record keeping and reporting systems are in place to help prevent, deter, and investigate and prosecute financial crime. So, where is all this maintained? Where is it? Where do we see a lot of rules that are issued? That comes from the Code of Federal Regulations, and it requires all credit unions and banks and financial institutions to establish BSA compliance programs. Certainly need to designate an individual responsible for coordinating and monitoring day-to-day compliance. Must establish and maintain a customer identification program. Let me go back to the second bullet point there in terms of designating an individual responsible for coordinating and monitoring day-to-day compliance. What's important to remember is, especially if you are at a small credit union or financial institution, as we all know, you wear many hats. It could be a different thing on a different day or a different hour or a different minute. But what's important is, obviously, when you're a smaller operation, and again, even if you're a larger organization, you need to make sure you have redundancies in place. What if somebody gets sick? What if somebody isn't able, what if somebody calls off for the day? That's a death in the family. Whatever it is, the regulators and the crooks, they don't care. And the crooks are always looking for weaknesses, and certainly, if you're getting an audit from anyone, a government agency, a client, whatever it might be, or for us with clients and things of that nature, or vendors, or whatever it might be, you want to make sure that you have people who are able to step into the shoes of others, because again, I've seen it with lawsuits in different areas and different statutes that are being trying to be enforced by government agencies or private individuals. A lot of times where you see the issues is that there wasn't a good management program in place. There weren't enough people in place. Somebody was away. Little things that it's ultimately the little thing that ends up getting you. Certainly, what it requires, you need to provide training for appropriate personnel, provide a system of internal controls to assure ongoing compliance, and must provide independent testing for compliance to be conducted by credit union personnel and outside parties. So again, you want to make sure if anyone wants to take a look at what you're doing, that you're doing it right. Okay, so let's talk about some of the financial industry requirements, and you can bear with me here during the presentation. I'll take a sip of water from time to time, and this will be the first little break. So what are some of the minimum industry requirements? Well, Let's go through them. So the first thing is you want to establish a system of internal controls for ongoing compliance. Well, that makes perfect sense. You want to designate individuals responsible for compliance management. Obviously, you want to have a compliance officer or officers or deputies or whatever it might be. That individual is going to coordinate, monitor day-to-day compliance among employees and within the entire financial industry. That person is also going to regularly communicate with the financial industry's governing bodies, i.e. the government. And certainly you want to have this individual have the authority to carry out different compliance tasks. Also, you want to be able to delegate additional duties as appropriately and as necessarily, communicate, establish procedures to all parties. Again, communication is always key. You want to be able, it shouldn't be difficult for anyone to be able to find what are our BSA policies? What are our anti-money laundering policies? What are our CSR policies? That should be very accessible. Staff should know. So again, in case somebody comes and is reviewing your policies, your auditor, examiner, whatever it might be, and they go and ask, just a regular hourly employee, and they say, do you know where your BSA policies are and what they consist of? And they can say, yes, I do. They're right here. And certainly that goes along the lines of personnel training. You want to have specific policies and procedures, adequate examples of suspicious activity, and appropriate steps to take. In other words, you want to have examples, real life examples of what is going on. So some more minimum industry requirements. Conduct independent BSA compliance tests. Review, as part of that, you're going to be reviewing overall compliance. Are we doing it right? Is certainly is what we're looking for. Or you want to review individual monitoring systems for suspicious activity reports, currency transaction reports, and other reporting instruments. So those are the SARs and the CTRs. Complexity may depend on products, services, customer sizes, and or geographic location. So again, if you're a small credit union and you're not lending to high risk lending or depending on who your membership base is, it could be a SEC based, whatever it might be, you don't have to have the same elaborate BSA policies that you might have with, say, if you were Bank of America or Chase Bank, or one of the largest banks in the country, and you're dealing with all sorts of people, businesses, entities, you name it, from across the country and across the world. So again, it has to make sense. Don't be intimidated by the fact it's like, oh geez, we have to have this crazy BSA policy and all this kind of stuff, but when in fact you really don't. You need to make sure it fits what you're trying to do, and what your credit union, your financial institution is doing. So what's the challenge? Obviously, you want to capture the data, and of course, that's always the biggest thing. That's what the people who are trying to do these things are trying to hide the ball. They don't want you to see that that they're up to no good. And we'll talk about this as the presentation goes on, when you're talking about stacking transactions. Really just being able to get in a situation where they're hiding the ball, as it were, as I said. So that's really the biggest challenge. Once you get that information, you want to convey it. You want to let your compliance officer know, because if you have it, you don't tell anybody, it's the same thing as you not having it. Is basically what it boils down to. It's great that you know, but if no one who can be placed can take action on it knows, then the bad guys have won. And then obviously once that information's been relayed, compliance officer, whoever's in charge, is going to look at it and say, what type of reports do we have to file here? Is it a CSR issue, or excuse me, is it going to be a things of that, do we have to, the CTR, not CSR, or do we have to do that? What do we have to report? because if you don't do any of that, I mean, ultimately there's going to be consequences for it, and those consequences could be penalties, fines, could be a lawsuit. So you don't want to be the one who they write the headline about. Okay, so now that we've sort of talked about the the generals of the BSA and the overall goals of what we're trying to accomplish here, let's get into some good stuff. Let's get into the money laundering. All right. So placement. That's the first step, first and most vulnerable step. And like I mentioned a second ago, that's capturing the data, capturing when it happens. You got to see, no one. It's just like the bank robber's not going to come in and give you a call, and well, maybe they're a dumb robber, but they're not going to come in and say, well, we're going to rob you at 10 o'clock on a Monday. You better be ready. Well, you'll be ready, and you'll have the police there. Same thing here. The money laundering isn't the person or people or whoever who's trying to do it. They're not going to let you know, hey, I'm going to be laundering some money through your financial institution. Just want to let you know it's okay. What we're up to. They're not going to do that. It's going to be coming in under the cover of darkness, or they're going to be doing it again, be trying to do it in broad daylight to make sure that it doesn't look like there's anything suspicious going on. Again, they're always attempting to introduce unlawful proceeds into the financial system without attracting attention. Well, that goes without saying. So what are some common placement techniques? Well, structured deposits in amounts attempted to evade reporting requirements. How are they going to do it? They want to get clever with it. They don't want to arouse suspicion. So they're going to make sure that they're, putting in smaller amounts and things to that nature. They're not things that they don't want you to catch. A lot of times you see it with refund check deposits from canceled vacations or insurance policies. That's always sort of, I don't want to say it's a red flag, because obviously those things happen. But you want to, whenever you start seeing that things coming back as returned or a refund, why is it coming back? Are you getting a refund? Are they getting a refund from a nice beach bungalow in the Grand Cayman Islands, and it's seems out of place because they live in Topeka, Kansas, and based on everything you've seen, they've never actually seen a body of water other than like a lake or a river. Those types of things. Those are going to raise red flags. Other things such as purchasing a series of monetary instruments, cashier's checks, money orders that are collected. I'm going to go back to the second stage here with some of the layering, information. So I apologize for any of those issues. Actually, we recently just my Pittsburgh office just moved into a new office in a different spot. So we are still trying to. That was 2 Fridays ago. So we're still trying to work out our kinks, I guess, with network connections and whatnot. So I appreciate the patience. Anyhow, back on slide 21, let's talk about the layering. Again, that's the second stage of the money laundering process. It involves moving funds around the financial system. Obviously, they want to hide the ball, create a difficult environment for you to be able to trace it and track it. Okay. So what are some of the common layering techniques? Again, exchanging monetary instruments for larger or smaller amounts, wiring or transferring funds through numerous accounts in one or more financial institutions. And again, the final step of it, what's the final step? Well, it's integration. Well, it's the ultimate goal of the money laundering. It creates the appearance of legality through additional transactions, further shields the criminal activity from a recorded connection to the funds by providing a plausible explanation for the source. So again, it starts, it's like you're moving away from an object. When you're close to it, you can see it very well, and then of course, as you move further and further away, it's tougher to see, and you just assume that's what it looks like. So that's really what you want to be able to. That's really what you want to be able to do in your in these situations, and what they're looking for. They're looking to make it look as common as possible. So what are some, and again, we already talked about some integration examples: purchase and resale of real estate, investment securities, foreign trusts, other assets. Ultimately, these are things that are a little more complex, a little more difficult to track down. Okay, so now that we've finished with the money laundering, let's go into the customer/member identification program, which we will simply refer to as the CIP. CIP, well, it's an identity verification procedures. They include risk-based procedures for verifying members' identity to the extent reasonable and practical. So a lot of times, I get the questions, and you get the questions in a lot of areas of the law and different things of that nature. There's a tendency, a desire, I guess is the best word to say, you know what, I want to get it right. I want to be 100% accurate. But a lot of times there isn't that possibility, and that's why the language in there, to the extent reasonable and practicable, is in there, because if you take reasonable steps and you have good procedures in place that make sense based on your membership, your customer base, things of that nature, that's what you're looking for. It's a situation, I get the question again all the time, when people repossess cars and they say, well, I need to send the repossession letter and I'm not sure I have a good address. I'm like, well, you need to know you need to send it to the last known address, and that's the best address you have, that's where you send it. They say, well, I'm pretty sure that they're not there. I said, but do you know for sure that they're not there? And the answer always is, no, I'm not 100% sure. But this is the information you have, that's what you use. Same thing here. These are the types of procedures that you have. It's not going to cover every potential solution or situation, because the crook is going to be trying to find a way around it. And to the second point, it creates an ability to form a reasonable belief that the member's true identity is known. So again, if they're doing their damnedest to hide who they are and really doing a good job of it, well, but then they may beat you. But at the end of the day, if you have good policies and procedures in place, you're gonna be able to have yourself in a good spot. And again, we're looking at based on assessment of relevant risks. So if you're a small institution, then it's going to be different. So what type of accounts are offered? What methods are available for opening an account? And here's that clearly is one that's really changed over the years, because things before it was, the member had to come in, and the customer had to come in and and apply for, they had to show up. They'd bring their ID, and to do what they were supposed to do. And great, it worked, it was fine, and you could look at somebody's ID and say, yep, that's them, no, it's not them, whatever it might be. And again, a lot of people are of course going to be a lot less what's the word for it, brazen in their attempts. If they're really walking in and saying, well, I'm John Doe, and meanwhile they're somebody else, and nothing matches their IDs or anything like that, pictures, whatever it might be. But with the advent of the internet, online, the phone, and things of that nature, it becomes more challenging. It's nice to have these options. It's nice to create opportunities for memberships and customer bases, but boy, it's certainly a brave new world. Again, what type of information is going to be available is going to be a big factor that you're going to look at in terms of how you're able to identify people. And again, your size, location, and membership base. And again, one other thing the information you're required is procedures for opening an account must exist. All right. Well, you can't just say, well, we're opening an account for any member who comes into our credit union or not. You don't want that to be the case. You got to have your procedures in place, and you must specify what identifying information shall be obtained from each member. This is important also. So you want to be able to create your policy has to be evenly applied and consistently applied across the board. You can't just say, well, we're going to have membership requirements for people with last names from A to K, and different ones from K to P, and the other ones from P until the end of the alphabet. They have to be consistent across the board so that there's consistency with it. So what's the minimum that you must? What's the minimum information that you need to record and get from your members? Clearly, you need a name and a date of birth. And obviously, if they're there and they have presented themselves, they will have they got here. They had to have had a date of birth, so they need to be able to provide that. Address. Well, the address is a little less clear because there's different types of addresses. Is it a residential or business street address for an individual? I mean, someone could be in a different spot. Once you get into the Army and the military, so Army or Fleet PO numbers or street address of next of kin of individuals without a street address, this is where it starts to get a little more complicated because not everyone is in the same boat. Or a principal place of business, local office, or other physical location for a person other than an individual. So obviously, if you're opening a business account, and I come in and I'm opening an account for Weltman, Weinberg, and Reese, I'm not going to provide you my home address. I'm going to provide you the address of where I'm sitting at right now. Identification numbers. We know these basically as a Social Security number, but any taxpayer identification number for a U.S. individual. So your Social Security number, that's what we're looking for. Clearly, once you get into a non-U.S. person, one or more of the following: do they have a Social Security card? What about a passport number in a country with a country of issuance? Do they have an alien identification card number, something like a green card or something along those lines? A number in country of issuance of any other government-issued document evidencing nationality or residence. And again, you want to have something like a photograph, things like that. So if you're on the New York border, your credit union's on the New York border, and you have somebody who wants to come in from Ontario and they want to become a member, things like a Canadian ID and things of that nature. So what are some non-documentary methods? Obviously, we just talked about things, pieces of paper, cards, documents, whatever that might be, tangible things that you can touch and feel and hold. But clearly, you can also rely on non-documentary methods of verification. But again, these have to be documented in your policies and procedures. So some of those methods include contacting a member, independently verifying the member's identity, compare information provided with the information obtained. Consumer report, credit reports, public databases, things of that nature are great ways of being able to sort of double check to make sure that you're getting accurate information. Checking references with other financial institutions, obtaining a financial statement. And again, if you're using non-documentary procedures, here's some different situations that need to be addressed. So if an individual is unable to present a valid government-issued identification that bears a photograph or similar safeguards. So if I come in and I say, I don't have my license, I lost it, and I don't, and they're not giving it back to me. Of course, that's kind of crazy because they'll give it back to you. But anyhow, something along those lines. If they don't have their ID, if they say they live down the street from you and they say they don't have a government ID, it's okay. Well, that's interesting, but that doesn't automatically preclude them from becoming a member. Is the credit union not familiar with the documents presented? And that's going to happen. There's a lot of documents out there, a lot of foreign documents, and you don't have to, if you don't have exposure to seeing those types of documents. I mean, I'm a lawyer. I've seen all sorts of documents and identifications and things of that nature. But there's plenty that I can look at. I get a lot of times I'll get the questions from my clients. They'll say, well, we got this piece of paper, this identity or thing, and they're from time to time, and it happens every couple of years or so, where I'm just like, wow, I've never seen this before. It's crazy, and it's the craziest thing I've ever seen. and then you start hunting around and Googling and doing stuff, and next thing you know, well, it's not, it's clearly fake, or it's, you know, something that's out there and exists, but isn't authentic. You know, an account obviously can be, you know, open without obtaining documents. An account is open without appearing in person. Again, these are all things that you have to contemplate. Other circumstances increase the risk due to the true identity of the member cannot be verified. So those are really the things that, you know, you have to be aware of, because those situations can and will occur. So lack of a verification, what happens if that's the case? Well, if you can't form a reasonable belief, and there's that word again, reasonable belief. Remember, it doesn't have to be an ironclad belief. It has to be a reasonable belief. You're looking at everything. You look at the documents in front of you, the information around you, and you say, you know what? It's just, I can't truly identify who this member is, or this prospective member is. So you have to have procedures to cover that. So what are the terms under which a member may use an account while the credit union attempts to verify the identity? Do you know, what is your procedure? Do you allow limited use? Do you put a cap on transactions? Whatever it might be, while you're going through the process. You know, should it, you know, when does an account get closed after you've been unable to identify that member? You looked around, you can't figure it out, and then because of all that, do you have to file a suspicious activity report? Do you have to file SAR? So those are really, you know, those are the challenges that exist with, you know, with verification. So let's talk about record keeping. Record keeping is always so exciting because everyone loves to keep records. And if the screen was on, you could see me sort of rolling my eyes as I say that. But you know what, record keeping is important because that's what ultimately keeps us out of trouble. Because you know, everyone's the same, where things happen, you're like, oh, I'll remember that, and then you don't remember it. And as the time goes by and gets further and further from what happened, you're like, oh, I think I remember. As soon as you say that, you know, that's a great opening for an attorney. I hear somebody say, oh, I think, and then, you know, they sound so convincing. I'm sitting in a deposition or something along those lines, have them testifying in a trial. It's like, do you think or do you know? That's really what I'm looking to get at. But if you have the records to reflect and to review, then you are going to be able to know, as opposed to thinking that you may know it. So supporting documentation shall be made available to, again, you're gonna have to provide it to any federal, state, or local law enforcement agency, and any federal regulatory agency that examines the credit union for BSA compliance, or, you know, if you're not a credit union, a different type of whoever your examiner is. Records must be retained for 5 years from the date the accounts closed or the date the record was made. So 5 years. That's always the question. How long do I got to keep this stuff? In this case, 5 years. At a minimum, the record must include all identifying information obtained from the member. Obviously, why, you know, you want to keep the information that they gave you. So that's going to be part of your record. A description of any document relied upon, noting the type of document, any identification number contained in the document, the place of issuance, the date of issuance, and expiration. Description of verification methods and results, and also the resolution of any substantive discrepancy discovered. Again, common sense that you want to have. What did you use to identify the person? If, you know, obviously if it's an driver's license, things like that, those are easy, those are straightforward. But if you've had to use other methods, you want to make sure that you're carefully recording it, because if somebody comes back and asks you, you want to be able to say, hang tight, let me check my records kept at that time. Tell me that this is the information we have, this is the information we have filed, and we're good to go. So, comparison with government lists. All right, so determine whether a member appears in any lists of known or suspected terrorists or terrorist organizations issued by any federal government agency. So if you're looking and you know, when you're sitting there trying to decide somebody's compliant and satisfying the requirements for membership, obviously you want to make sure they're not a terrorist. The OFAC, specially designated nationals. Again, that's one of the lists you want to be looking at. Determination must be made within a reasonable period of time after the account is open. Clearly, you want to make a decision. You know, how long? What's a reasonable period of time? What's going to depend on what type of investigation you have, what type of records you're gathering. And again, all federal directives issued in connection with such lists shall be followed. Adequate member notice. So once you've made a decision, what do you need to do? Well, you need to provide adequate notice that the information has been requested to verify their identity. You're going to describe the identification requirements and provide notice in a manner reasonably designed to ensure that a member is able to view the notice or is otherwise given notice before opening an account. Post a notice in the lobby, on the website, on the account applications, or other form of written or oral notices, depending on how the account was opened. Obviously, you go to a lot of branches, and you see the notice is right there on the teller's window. It's on the drive-through window. But clearly, if you are opening accounts via the internet, it needs to be on the website. Account applications, you name it, put it everywhere you can, where it makes the most sense. Okay. So as we, again, we've gone through some of the, the compliance requirements, what you need to do to be in a good position to move forward. Now let's get into a situation where we're getting into the SARs, the suspicious activity reports. You have good policies and procedures in place. You've built a good foundation. So now let's test that foundation out and see what's going on when we get into some bad behavior. So what is a SAR and when does it need to be filed? It must be filed if a credit union knows, suspects, or has a reason to suspect that any crime or suspicious transaction related to money laundering activity or violation of the BSA has occurred. Again, remember, knows, suspects, or has a reason to suspect. Knows is I know that the sky is blue. Suspects. Well, I suspect, based on the information that I have, I suspect that there's some bad dealings going on, or has reason to suspect. That's a little more complicated, but it's not all that complicated. If you see a bunch of smoke around, even though you haven't seen the fire yet, that smoke just didn't come up from anywhere. There's a fire somewhere that's creating that smoke. So that's sort of a reason to suspect standard that you're looking at. Management must properly notify its board of directors or designated committee of any SAR that's filed, and it's obviously not required for a robbery or a burglary. Those are, you report those to the FBI or the police who are investigating the crime. So common types of SARs that you're going to be reported: money laundering, check fraud, mortgage loan fraud, credit card fraud, consumer loan fraud, check kiting, counterfeit checks, identity thefts, false statements. You pretty much get the picture. Now, with a SAR, there is confidentiality. So a SAR or any information that reveals the existence of a SAR is confidential and shall not be disclosed. Any request to disclose a SAR or any information that reveals the existence of it should be declined, and you should immediately notify FinCEN or NCUA. So, because again, that's a question I've always gotten, where somebody, a credit union's on the fence. Should I, I don't know, I can't tell if it's really, it seems close, and say, hey, trust your gut, and you remember, these are confidential. It's not like that, they're going to find out that, the member's going to find out that you submitted it, because it's confidential. You're not going to be disclosing it. They're not subject to subpoenas. The credit union or an agent of making a voluntary disclosure of any possibility of law to a government agency shall be protected from liability. So if the authorities are there and they're demanding this information, and they have the legal right to get it, then obviously you can provide it. So insider abuse involving any account. So this is a good example of reportable activity. Transactions aggregating $5,000 where a suspect can be identified, $25,000 regardless of a potential suspect, $5,000 plus the individual potential money laundering or BSA violations. Again, it's just some examples. Transactions that fall into any of the following: involve funds derived from legal activities or intended or conducted in order to hide or disguise funds or assets derived from legal activities, are part of a plan to violate or evade any federal law or regulation, or to avoid any transaction reporting requirement designated to evade the BSA requirements, have no business or apparent lawful purpose. Again, use your common sense. If it walks like a duck and it quacks like a duck, it's a duck. And in these cases, you want to make sure that you're looking into these things. What to file? Suspicious transaction shall be reported, obviously, by a SAR. You're going to get the information you need, and you're going to include that information. When to file it? no later than 30 days after initially detected. If no suspect was identified on the date detected, filing may be delayed an additional 30 calendar days. Reporting should not be delayed more than 60 calendar days. So if you suspect something's up, and you don't know who quite is doing it, you have 60 days from that activity to report it. If I'm the one doing the bad deeds and it's me, you got 30, and I'm up to no good, 30 days to report that. Where to file? SAR gets filed with FinCEN. How to file? Obviously, electronic filing has taken over for the SARs. Same thing with CTRs. There's a standardized form. Again, it's sort of become like eOscar, where everything for credit reporting, where everything is using standardized forms, so everyone understands what's being communicated. So shared branching. If you have a SAR filing when you have multiple branches, in cases affecting those branches, which credit union is responsible for the filing? Technically both. However, government doesn't want to receive two reports. Decide which party will report based on whatever your agreement is. So if it's pick one and move forward. As long as it's getting reported, that's the moral of the story. The subject of the SAR cannot know its filing, and of course it allows for joint SARs filing. So that's the rundown of the SARs. Let's talk about the CTRs, the currency transaction reports. These are the ones where any transaction over $10,000 or the foreign equivalent, in terms of deposits, withdrawals, or exchange of currency or payments by transfer of, through, and into the credit union, those need to get reported. Obviously, people like to come in and do those $9,999.99 ones. They may be up to something, but they may not either. So for transactions where the CTR is required, verify and record the individual's name, address, account number, and taxpayer identification, social security number. Again, all the biographical information you need to know to identify that particular member. So who's going to report the CTR? So deposits, anyone benefiting from the transaction, joint account holders, withdrawals, only the person conducting the transaction, unless other information known leads you to believe others will benefit from the transaction. So here's some examples. Wife withdraws $12,000 and doesn't say what it's for, you report the wife. Husband deposits $12,000, you report both. Again, this is a situation in a joint account. Wife withdraws $12K and says it's for a car for her and her husband. Guess what? Both get reported. When to file? You have 15 days following the day in which the transaction occurred. So if it happened today, you have until the 15th of December in order to file it. Again, you're going to file it with FinCEN. And again, copies of the report, 5 years. 5 years of the date is the magic number that we're looking at here. So completing a CTR, cash in, cash out transactions may be reported on the same CTR if they are both qualify as reportable transactions. Transactions should not be offset against one another. So again, you're looking at the individual transaction that takes place and how those come together. It's not like if you do 5 in, 5 out that you're off the hook. So here's an example. Example 1: a member deposits $11,000 into a savings account and withdraws $3,000 from the checking account. What should you file? Well, you're going to file CTR for the savings account deposit, but not for the withdrawal. Okay. Why? Because $11,000 got deposited. That's over the 10, but you took 3 out. So in that case, it's nothing to arouse any suspicion because it's not more than $10,000. And when we talked about with the offset, that would be a good example of maybe what an offset might be. It's like, well, it's only $8,000. They deposited 11 and took out 3, so it's really just 8,000. Nope, that's not the way it works. You got to look at each individual action. Example 2: a member deposits $6,000 into a savings, withdraws 4 from their checking, and presents $6,500 in U.S. currency exchange for foreign currency. Try saying that 3 times fast. What should you file? Well, one CTR with more than one entry. So in this case, the cash in transaction is reportable for the total amount of $12,500. So you're depositing 6, and you're presenting $6,500 for a currency transaction. So for the currency exchange. So that's 12,500. The cash out transaction is also reportable for the amount of 10,500. 4,000 is withdrawn and 6,500 is returned in foreign currency. Now this is a little more complicated again because you're getting the foreign currency in and out and everything like that. But again, remember you're sort of the moral of the story be you're adding, you're not offsetting. So if you're adding and you're coming up above the numbers, that's sort of I would say it's going to be a bright line test, but it's going to be something that's going to help you to determine whether or not you need to file the CTR or not. Of course, then you have situations with multiple branches and multiple transactions. So these are structured or structuring of the transactions. No person shall, for purposes of evading the CTR requirements with respect to such transaction, cause or attempt to cause a credit union to fail to file CTR, cause or attempt to cause a credit union to file CTR that contains material omission or misstatement of fact, structure or assist in structuring or attempt to structure or assist in structuring any transaction. Basically, don't try to evade filing the CTR by doing a whole bunch of complicated things that somehow might get you around the requirements of being reported. So here are some examples. Obviously, there's situations where clearly businesses, things of that nature, they engage in transactions of $10,000 all the time, daily, hourly. Probably going on right now. So there are exempt persons from being reported. So CTR is not required for any transaction between any exempt person and a credit union. Exempt persons include another financial institution, a department or agency of the U.S. or any state, or any political subdivision of any state. Any person established under any entity established under the laws of the U.S. or any state or political subdivision, interstate compact, basically a government agency. Business within a U.S. or state. More exempts, any other non-listed business that maintains a transaction account for at least 2 months, frequently engages in transactions in excess of $10,000, and is incorporated, organized under the laws of the U.S. and is registered and eligible to do business. So again, you're looking at situations where frequent flyers, as they were, who are frequently involved in are American citizens or businesses. Designate an exempt person by filing the FinCEN Form 110. It's not required for currency transfers to and from any person of the 12 Federal Reserve banks or the exempt persons list. Designation must occur within 30 calendar days of the reportable transaction. You need to review it annually. So what's an ineligible business? A business engaged primarily in one or more of the following activities may not be treated as a non-listed business. So purchase or sale of members to basically somebody selling a car, car dealers, boats, mobile home sales, practice of law, accountancy or medicine, professional organizations, auctioneers, people who are running buses, charter buses, ships, planes, gaming of any kind, investment advisory service, investment banking, real estate brokerage, pawn brokerage, title insurance and real estate closing, trade union activities, and any other activities that may be designated by FinCEN. So again, these are the businesses that are regularly engaging in larger transactions, law firms, accounting firms, things of that nature. They got money coming in, money coming out all the time. So what about currency purchases of money instruments? Record keeping on your card if daily purchases aggregate $3,000 or more. So if a purchaser has a deposit account with the financial institution, the name of the purchaser, the purchase date, type of instrument, serial numbers, dollar amount of each instrument purchased, excuse me. Verify the identification of the purchaser, members, a signature card, non-members, explanation of a document normally acceptable within the banking community. Again, it contains the purchaser's name and address. Let's talk about wire transfers. The originating bank transfers in excess of $3,000. You need the name and address of the originator, the amount, the execution date, the instructions, and the identity of the beneficiary financial institution. So those are some just the different examples. Let's talk about some information sharing. Again, we sort of already hinted upon this, and so I don't think we really need to spend a ton of time on it. But obviously, federal, state, or local foreign law enforcement agencies investigating terrorist activity or any money laundering activities may request FinCEN solicit certain information from a financial institution. So after receipt of a completed certification from a law enforcement agency, FinCEN may require a record search to determine whether the financial institution maintains accounts that are involved in these transactions. So once you get this information, once you get this request, you must conduct a one-time search of your records, including current accounts, accounts maintained during the preceding 12 months, and transactions conducted outside of an account by or on behalf of a named suspect during the preceding 6 months. So really you want to be looking at, again, these are situations where you're getting a request for information from a government agency, law enforcement, things of that nature. This is the type of search that you need to engage in. Positive matches must be reported back within 14 days. No details shall be provided other than the fact that there is a match. Negative responses are not required. Financial institutions may only use the information for reporting, determine whether or not to establish and maintain an account or engage in a transaction or to insist in BSA compliance. Subject lists are not permanent watch lists. Suspect lists generally relate to one-time inquiries and are not updated or corrected if an investigation is dropped or prosecution is declined or subject is exonerated. So again, these treat them as one-offs. Again, it goes back to the platitude of where there might be smoke, there's fire, or there's smoke, there's fire. But in this particular situation, you're looking at it from the perspective of it's a one-time request, and you can't take that into consideration moving forward. Inclusion on a subject list shall not be the sole factor determine whether to file SAR. Actions taken pursuant to the information provided to a request do not affect an obligation to comply with the various rules. Again, it's sort of not a silver bullet that it allows you to say, hey, we don't have to worry about any of this that's on this list, therefore we have to report it. That's not the case. Again, use your senses. Take a look at it. If it makes sense to file something, then SAR or whatever it might be, then do it. If it doesn't, but even if they're on a list, you look at it and say, you know what, it just doesn't make sense. It doesn't fit our policies and procedures. Then I would say that you're not required to do it. So financial institutions may not disclose the primary banking regulator, the law enforcement agency requesting the information, and the fact that the request has been made. Obviously, you get it and you keep it quiet. You complete it, and then you move on down the road. You don't want to post a notice on your website that, hey, these people have been searched for documents. A document search that was performed is essential. Again, you want to make sure that you're properly documenting everything and keeping copies of what you return to FinCEN. Voluntary sharing, again, it's encouraged. You want to identify reports. If there's something going on, then you want to be proactive if it's something that can be reported. Specific protection. There's again, pursuant to Section 314B, there is specific protection for civil liability. A financial institution must notify FinCEN, though, of its intent to engage in information sharing. And again, you must establish, maintain adequate procedures, protect the security and confidentiality of the information. You can't publish the notice in the paper, if anyone reads the newspaper anymore. Voluntary sharing, again, more information about processes and policies should be developed. All stuff that we've talked about. You need to make sure that you have a good process and procedures in place, and you're following it. A notice to share information is effective for 1 year, and you must take reasonable steps to verify the other financial institution with which you intend to share the information also submitted the required notice to FinCEN. It's a two-way street. Everyone needs to let everyone know what is going on. Information received from other financial institutions, again, subject to the same use requirements and confidentiality requirements of required information sharing. You can't just blurb it out and let everything know. So and then again, financial institution is not authorized to share the SAR, and again, Section 314B may be used to determine whether to file one if necessary. All right. So as we wrap up here, again, sorry, we're coming. We've gone past the hour here, but obviously with the technical difficulties, we'll get wrapped up here. So Office of Foreign Assets of Control, OFAC. Again, you gotta have policies and procedures, designate an officer, gotta have independent testing, screening requirements, member account access, determining whether OFAC hits are valid or false positives, report positive matches to OFAC within 10 days. Procedures and processes, again, you want to make sure that you want to have a procedure for blocking funds to OFAC depending on the nature of the sanction. Transactions to or from entities identified as a positive hit must either be blocked and account funds frozen, or the transactions rejected. Of course, you want to have training as far as all that goes. So, like I said, as we finish up, what are some commonly cited violations? I've hinted about them throughout the presentation. Where are we failing? Well, we're failing a lot of times. Is your BSA risk assessment not detailed? Do you not have procedures documented? What about, it could be anything. It could be anything in the basics, anything with shared branching. Are your SARs not completed correctly? CTRs fail to list all the beneficiaries. We talked about, husband and wife situation there, like on a joint account or something along those lines. You don't have an OFAC risk assessment, no policies or procedures, no procedures for reviewing law enforcement requests, training deficiencies. So, I mean, again, these are really the things that you see in any area. The entities that are getting dinged for, like I said, whether it's a Fair Credit Reporting violation, SCRA, the Service Members Civil Relief Act violations, those types of things, it's because no one has a policy or procedure in place. So it really is important to have those things, and that's ultimately what they focus on and pounce on. It also puts you in the possibility of getting more substantial penalties, because again, you could have criminal, civil, or different types of penalties. Federal banking agencies and FinCEN can bring civil penalties from $500 to $500,000. You're talking about jail time. You could be barred from serving on the board of your credit union or any credit union board. And everyday non-compliance is a separate violation. So the violations stack up and they add up, is really what happens. Fraud prevention tips: certainly use due diligence to help detect fraudulent transactions. As I mentioned earlier, does the transaction make sense? Use your common sense. Does it make sense? Do you want to, should you be looking at it closer? Is it a large amount of money? Invert the problem. Consider the situation from a thief's perspective. What would the crook do? Is always, I guess, a good thing. But if you're not a crook, how would you know what they ultimately would do? But certainly think about, hey, would this be a good way? If somebody is presenting you with an example, think about it and say, you know what, this might be a good way to subvert the system, because we're not thinking about those things in everyday situations. We're thinking like, we're just doing what we're supposed to do. So if it looks goofy, it's looking like it's an issue, think about it. Okay, would this be a criminal issue? Something's trying to accomplish, and if the answer is yes, then you move forward. You want to stay up to date with different resources, the Department of Treasury, NAPQ, NCUA, things that those are all great resources. Obviously, we have this BSA training at least once, sometimes twice a year. We have great articles and webinars and things like that. You can certainly sign up for those things if you don't already get them. I'd highly suggest that you get on them. There's a lot of great content that comes out. We record these webinars. All this information is available to you. Like I said, it's really, we're producing a lot of great content for people to enjoy. So as I finish, let me simply say this: thank you for your time and your patience. I apologize. I'm going to try to get the computer. There we go. I'm back. I've moved locations, so I still exist. I didn't get eaten by the internet monster, so I'm still here. But thank you for attending the webinar today. I hope you found the presentation to be informative. Remember, there's going to be a short survey that's going to pop up. And please share your feedback in terms of if there's any webinars or any information that you'd like to have. Again, we have bankruptcy, foreclosures, commercial, we have replevin matters, repossessions, you name it. We get involved in it. Like I said, we have a lot of great products and content that we're producing. You'll get your certificates no later than the 15th of December. If members of your team couldn't attend today, they can watch a recorded session, still receive the certificate. Just remember, they have to watch it in its entirety.